than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money is...
Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. I think a lot of people are starting to wake up to reality. However, there's still so many people that are asleep, right? I think that one of the biggest things, obviously there's been lots of things that people had to wake up to over the last few years since we've been doing this podcast. But I think, today I want to talk about a property market update, right? And I want to go through some data from CoreLogic that's out there, and also want to go through some data that I'm seeing real world and do a fly around to different locations and talk about what I'm seeing activity happening in certain markets, because one thing is to see all the stuff that you're being told from the propaganda outlets. We know not to trust all that stuff because it's all skewed and all manipulated and that. So I'll be giving you insights from some of the notes from CoreLogic, which is the data, API data sort of out there, but also be giving you stats from the real world from someone that actually goes out and negotiates on thousands of properties a month, ends up purchasing hundreds of properties per month for myself and for other people. I would be Australia's number one best sort of litmus test, because I see from end to end of the country, from each corner of the country, from all different markets, whether they be metro, regional, or anything in between. So I'll be giving some updates on the property market. A lot of people's reality, and becoming awake is a lot of people used to think, oh no, a property is going to go up, this is what's going to happen, that's what's going to happen, etc., but not realizing how the markets interact and why they do what they do. So I think a big wake-up call was 2 years ago. People said that the property market was going to crash by 40% in February 2020, and the market has gone on to double in most circumstances. So looking at that, taking that data in place, let's go straight in and take a deep dive. So we look at some of the takeaways here. Sydney property prices have dropped 0.4% in the last week, dropped 1.8% in the last month, and dropped 7.6% in the last 12 months. That's what CoreLogic is saying out there. So the question I ask is, if we look at Sydney property markets, I'll tell you CoreLogic's data, and then I'll tell you what I'm seeing in the market, right? So 7.6% in 12 months, right? That sounds like a big fucking crash, right? But if you think about some of that data, it was overinflated data anyway, right? It was some of those properties were a bit, they shouldn't have sold for those sort of prices. But if we look at real data, right? So I live in an area where, houses sell for 5 mil sort of prices, and the land sells for 3 or 4 mil just for a block of land. Surrounding areas, like in little greenfield estates, are selling blocks of land for $1 million for 350 square metre block of land and all that sort of stuff. Looking at these markets out there, looking at what's happening out there, I find it quite amusing that, like, these things, like the properties I talk about that were selling for 4 or 5 mil, they're actually going up, right? So I haven't seen a crash there. If we look at where I have seen a crash across the Sydney market, I wouldn't say a crash, it's just come off from the top, would be in areas where the prices were between like 1.2 and say $1.6 million. Those markets have softened off a little bit because people's incomes do not now service for the debt at the current interest rates. So what I mean by that is that a lot of people could have serviced. You've got a husband and wife enslaved into a job, having to pay their mortgage. They go to the bank says, okay, you can afford to pay $1.3 million for a purchase price for a property, whatever the case might be. And then they go out and buy property. Now the income might only service for $1 million. So that market's got less buyers, less competition in it, which has caused a little bit of a decay in competition out there. If we look at places like Parramatta, we look at unit markets. If we look at Mount Druitt, right, like we've all got API data, go type in 2770 into realestate.com, you will see that market has actually gone up, and the stats and the data may not show it, but you go and try and find a unit. Like I was buying properties in Mount Druitt 6 months ago for 280, 300,000. But now you can't find anything under 350,000 in Mount Druitt. Like, to get into there, I think it's too expensive. So when we look across Sydney, and it doesn't mean I'm buying in Mount Druitt, I don't see the value there at those sort of prices. There's other areas that are of better value. I just did a property deal which was, whilst we see markets have dropped, not all markets have gone up across Sydney in the last 2 or 3 years. There's some areas in Sydney which are very dense migrant population that haven't done anything since 2016. Actually, the market went back between 2016, let's say a 2-bedroom unit, around Lakemba, right? A Lakemba 2-bedroom unit was selling for, $450,000 back in 2016. Now they're selling for $320,000. You look at Parramatta, there's areas in Parramatta which would pick up, properties that are used to sell for $500,000, you can pick them up for $350,000, $380,000 for the property. So the markets, although we've just seen a massive boom, there's some markets which are still cheaper than what they were 7 or 8 years ago. Those markets are now starting to see their day. There's some markets which are starting to take off because there's a lot of more people that can afford in that area. It's like I've always said, a theory, and this may not be the theory this time because we don't have the same things under the market, but cars, right? If you have a recession, you might see all the Lambos and all the Ferraris come up for sale in the GFC. The high-end cars, there's a wash of them. You can pick them up much cheaper. But the Camrys and the Fords and the Holdens, there was a lot more competition upon there because more people could afford them. They couldn't afford the more expensive stuff because there was a liquidity issue. And it just goes, the same thing flows into the property market. So the affordable properties, as I've always talked about, having a recession-proof property portfolio, is that in times like now, that these things start, taking off. So just something I'm seeing out there. We look at places like, I have so many people message me saying, what about Brisbane, Nathan? And we look at the data here. It says here from RP data, Brisbane property prices dropped 0.6% last week. They're up 11.1% over the last 12 months. So if we look at the last 12 months, you might be sitting there going, Brisbane's doing much better than Sydney market at the moment. We may as well go and buy in Brisbane. But if Brisbane market, look at 11.5% over the last 12 months for growth in Brisbane, let me tell you, the stuff that was selling for 150 in Brisbane that you can't get for under 300,000 now in Brisbane. There was stuff that was selling in the Gold Coast that was 200,000 and now selling for $500,000. So that market is one of the hottest markets in this country right about now. If we look at the data, it says that it's still going up, but like looking at the market, still very, very hot. It may have come off a little bit from its peak, but that market there is very, very hot. I actually sold off about 5 properties recently, had to sell a couple of properties, do a few other things. When I say I'm selling off 5 properties, I've picked up about 700 units that I've bought, most of them outright cash with no loan in motel scenarios. So I just did a bit of rejig of my portfolio. And that market, let me tell you, when you put something in the market, it sells for over asking price as soon as it hits the market. So, looking at that market, people will be thinking, okay, Gold Coast, Brisbane, these areas have gone up, they must be strong, must be hot. Why would you want to go and be in competition with other people in the market, right? That's a silly thing to do. So, from my background, like I was buying probably 50, 60 properties a month in the southeast Queensland corridor for a period of about 7-8 years. Each month, 50, 60 properties. Now I might buy 2 or 3 properties in that market because I just see that it's gone up too high. But a lot of novice investors will be like, oh, that's the market that's going up, I better go and jump on the bandwagon, right? And it's like that boat has sailed, right? You want to go and find the markets that have been hit and where the value is. So I'm not into hot spotting, but it's, I look at the opportunity. I'd prefer to have someone sitting at the table talking to me that's motivated to do a deal, and you can get a good deal out of it. So just my thoughts on that. Melbourne, we look here, it says Melbourne prices have dropped 0.2%, and over the last year they've dropped 5% over the last 12 months. The Melbourne market I'm not too familiar with because I don't operate too much in the Melbourne market, and there's no offence to anyone from Melbourne. I do buy a couple of properties in Melbourne. I do personally own a couple of properties in Melbourne. I don't like it for your typical sort of residential properties. I think Sydney's a much better market. That's why I don't play in it. But looking at that market, it looks very similar to the Sydney sort of market. It doesn't have here much in and about the Western Australian market or the Perth market. Here we go. Let's have a look here. The The Perth market, month to date, is up 0.1%. From the start of the so-called illness out there, Perth is up, or Western Australia, Perth is up 23%, compared to pre-pandemic, 24.5%. The last 12 months, Perth is up 4.1% here. So if you look here, this is a very interesting bit of data here. Since 2012, average annualised. So Sydney has doubled, it's up 100%. Melbourne is up 68%. Brisbane and the Gold Coast are up 70%. Adelaide's up 74%. But poor old Perth's only up 15%. So, is it ready for a boom? I'm not here to talk about, what is booming and what is not. But I know where I am playing, and that's not necessarily in Perth. I do buy some stuff there, but I buy stuff across the whole country, and that's, I guess, my intellectual property. That's what I do. But there's certainly markets out there that have eerily similar characteristics to what the Gold Coast market had and the Brisbane market had going back over the course of the last decade. So if we look at 2010, the market crashed. 2013, it started to take off. 2016, it sort of stalled. I always said the Gold Coast and Brisbane, when interest rates come down, when tightening happens, when relaxation of monetary supply happens, we're going to see the first cab off the rank will be that Southeast Queensland corridor. And what has happened? It has taken off. There's other markets that are in this country. There's two that I'm very aggressive on. Probably three, two of them sort of merge into one, but there's three markets across the country which I think have very, very similar characteristics, which are very, very undervalued with a lot of upside. These markets that I'm seeing, some of them are capital cities and some of them are capital sort of metro sort of areas, capital regional areas, so large regional cities. And when I say regional cities, I mean like, the size of Darwin and Hobart and stuff like that. And I'm not buying in either of those two states, so I'm leaving them off my map. I'm not talking about Darwin or Hobart. I've never bought anything, don't have any intention to buy anything there. But I'm saying in terms of size of locations, geographically, that sort of size. But there's in these markets, what I'm finding is because of the pent-up demand, rents are 10% yields in these markets. There's an abundance of buyers. There's an abundance of tenants. There's a rental shortage. Very similar sort of things to what is happening out there in these hot sort of markets, which are pushing up the prices. So even though we're seeing negativity in the news, right, and I'm sure that inquiries to real estate agents may have dropped and stuff like that from all the data that I have from inside the agents. I get a lot of information from talking to agents, from working with agents on a daily basis. Looking at that data, there is less leads coming through, but there's still an abundance of buyers out there that are taking action. So looking at properties which you can pick up for 100 grand, 150 grand, 200 grand, 250, 300 grand. Those markets are still very, very hot with activity happening. And I'm getting gazumped on a regular basis with other people coming in. Gazumping is when you get an offer accepted, someone else comes in and offers another 20 grand, 30 grand, 50 grand, just because those markets are still very, very hot. And some areas like this, what we're talking about, I've actually seen 100% growth in 2 years, 100% growth in 12 months. I got a text from someone the other day. They bought a property from me for $59,000, now renting for $550. Another one that's in the block next door was 65 grand, renting for $750 per week. I was on the phone with a follow-up call with one of my investors. I said, I think that it might go to 250, 300 soon, and then would let it go, which would be a 5-bagger, right? And you only hear those sort of returns when you're talking about cryptocurrencies and stuff like that, which are very volatile. So, there is opportunities out there still. I've only talked about market updates on sales, which I will get into rents very, very shortly. But, in my thought, just as a summary of what's happening out there, you've got all this data. There's pages and pages of data coming from RP data. You can go and look at all the sort of reports that are out there from RP data. But looking at CoreLogic, but looking at the overall condition of the market, there is some markets that are soft. There is definitely a lack of buyers out there, but there's also a massive lack of stock. There's a lack of people with trust in our currency, which is meaning people don't want to go and sell an asset for money because everything's going up with inflation. So a lot of people are staying put. That's putting a pent-up demand. There's a lack of building and construction going on, because obviously costs of everything rising, builders going broke, being able to get funding for finance. So if you think about it, a lot of people have gone out and bought blocks of land in order to build houses on. Those people will get into money trouble because they can't afford to build the house because they don't service for the build anymore. But the land may have gone backwards because it's non-cash flow producing and the cost of goods are going up so much to be able to build on that. So I think lack of stock coming in the market, as we start opening up the gates for immigration, that will help boost up values of pent-up demand. And there is still a lot of buyers out there in the lower ticket price ranges. So money is still very, very cheap in the cost of things. If you look at the cost of inflation, right? If you have $100,000 in your bank account and inflation's at 7%, you've really only got $93 of spending money at the end of the year, right? You're losing 7% of that sort of money due to inflation and everything else going up around you. Just look at it when you go to the shopping or go get food or go get lunch, whatever the case may be, go fill up your car with petrol. So you've got that aspect of it, but you've also got, the way I see it is that a lot of people are out there looking for a return on their money. There's a lot of things that aren't paying returns. Stock market's not paying return. Crypto's gone down the gurgler. Certain things have gone by the wayside. We have rents which are rising massively. So if you look at the rental market, a lot of areas you can still go and buy 7% yields, 8% yields, 10% yields. So if you're going out and getting a loan at 4%, 5%, let's say you're getting a loan at 5%, people go, oh, I'm so upset I've got a loan at 5%, right? If you give me a loan at 5%, I'll take it any day of the week, right? 5% is a good return, good rate to be paying anyway. 5% is still cheaper than the cost of inflation, right? So if someone is lending you money at 5%, they're really losing 2% by giving you that money because they could have invested it into something else that's going up with inflation. So if you've got savings, you're losing your money. If you've got debt, you're in a better position than that. But then if you're also getting cash flow return on your money, you could be getting 7% rental return, and paying 5% interest and then covering all the costs. But really you've got an asset that's being pushed up due to inflation, and you've got the rents that are being pushed up due to inflation. Now, getting on to the rental returns out there in the markets, I have purchased from every corner of the country. I speak to my investors on a quarterly sort of basis. I pick up the phone and have a chat with my investors, sort of work through with my buyers agents here at B.Invested. I see what all my investors are doing with their rents. I manage probably about 90% of the properties that I buy for my investors. And with looking at those properties that I've bought for my investors and looking at what's happening in my property management businesses, I have seen amazing things happen, right? So I look at all of those rents that are out there, and look at the costs of those rents. And every time a property becomes vacant or comes up for a lease renewal, we're dumping, $20, $50, $80, $100 per week. Some properties, $150, $200 a week extra rent than what they were getting beforehand. So if an investor's getting an extra $100 a week, I'm happy because I'm getting paid an extra $7 a week for the management fee, or $8 per week for the management fee. If I've got 1,000 of them, that's $8,000 per week extra income because I'm getting so much extra rent for my investors from pushing up those rents. So, looking at the portfolios of my investors out there, and this is pure litmus paper testing of my own data inside the businesses. I'm seeing rents are rising 20, 30, 40, 50% in a 12-month period, right? And I kid you not, right? Because we've got a very small starting base for those rents to jump up. So I saw an article that was yesterday on the Facebook Live that I did pre-recording to this, and there's less than 20% of the properties available for rent in this country. They deem $400 per week to be available, to be affordable rent, right? So in this country, if you're paying $400 a week or less, you are paying affordable rent for this country, for us to live here. So there used to be 40% of the properties available for rent used to be $400 per week or less. Now there's less than 20%. There's like 19% of properties available that come up for lease are under that $400 per week, which is affordable rental scheme. The thing that I've always focused on is making sure that all of the properties that I purchase are like $150, $200, $300 per week rent. So all of those rents that are, that are affordable rents are being sucked in a vortex and going from affordable to unaffordable levels. So that's a very interesting thing to see out there. I think it's very important for everybody to note on what is happening with the rents, because I've literally got clients here which have over the last 2 years built out really cool portfolios, 10 properties, 15 properties, 20 properties in their portfolios. Their rents are now going up. Yes, their interest rates may have gone up. Yes, they may have fixed their rates, whatever the case their situation is. If their rates have gone up this month or next month or last month, whatever they've gone up by, who's to say that they're not going to come down in 2023 or 2024, right? So it's a very short-term sort of increase in the interest rates, but the rents are fixed. Your interest rates are variable. They move up and down and go with cycles, but your rents are quite naturally fixed. So as the interest rates are rising, the rents are rising, but as the interest rates come back down, the rents stay high. A lot of my investors that have got 10, 15, 20 properties, they're in a position where they're building massive cash flow streams that they can retire on pretty quickly. So I've got people which have bought, 10, 15 properties. They've all got $100 per week positive cash flow now. That's $1,000, $1,500 per week extra cash flow coming into their pocket that they didn't have prior to those rents going up. So very, very exciting. This is not something that's from an area of Sydney or Brisbane or Melbourne or Gold Coast or Perth or Cairns or Darwin or wherever. This is a across the nation inflation to the rental market. So we can sit here and look at all the rents and the figures that they've got in these reports and stuff like that, but I'm telling you, from hands on the ground, I'm putting up thousands of rents per year in my businesses, my property management businesses that I've got, because I'm seeing the opportunity there. The investors are getting higher cash flow, and that's helping them out dramatically, especially in the time of inflation. So this is a market which really creates wealth. Is it a good time to be buying? Well, there's always opportunity to be buying. I'd rather be buying when I'm dealing with someone that's more motivated than not, right? Hence why I haven't been buying in the Gold Coast, hence why I haven't been so bullish on Brisbane, hence why I'm not buying houses in Sydney in a lot of areas. I like buying in those areas in Sydney which are smash, where you can still pick up for 300 grand, with a good rental return and a good upside for growth. I like buying in the places in Queensland which are 100 grand, 150 grand, 200 grand with, $300 a week rent and good strong cash flows. I like buying the places in Perth which are 200, 250, 150k, which have got strong cash flow. I'm buying across the board, right? No matter whether it's in a little, when I say little, I'm talking like a regional area, but a large regional area. Doesn't matter which corner of the country, and there's opportunities. I'd rather be dealing with someone that is motivated than someone that is not. Is it a good time to be selling? Right? I think that a lot of people, that are trying to sell, there's some markets which, yes, if you're thinking of selling, go sell your property now. But I've never met anyone that's come to me and said, hey, Birchy, I'm happy I sold a property 10 years ago. Most people are like, I wish I bought more, I wish I didn't sell, I wish I held on to it, etc. So be very diligent if you are thinking of selling. Are you looking at, the interest rates are going up at the moment, I may as well sell. But what happens in 12 months' time? You're going to be like, interest rates came down, I may as well go and buy again. But the whole game is not skewed for that way. It's probably best for you not to be investing if that's the case. So, if you're a seller and you're in a market which is declining, like we look at some areas of Sydney or those markets which have got, a bit of a decline in them, it may not be the best time for you to be selling in those markets. If you're an investor, which is a buy and hold investor like myself, looking at building up cash flow and building yield through your investments, this is an amazing time to be in the market, to be pushing those yields, having those assets which you can go back and keep pushing up the rents. If you were an investor that was out there buying and selling and flipping properties, great, you made 100 grand, made 200 grand, good on you, go pay your tax, pay your stamp duty, pay your agent's fees, but you don't have the asset anymore, right? when you hold a property and you take it in perpetuity, you have full rights to the future growth in it, for the future rental income from it, from all the revenue that comes through it and all the gains that could come from the future. When you sell a property, you lose all rights to all of that. So if you've got a bag of properties, 5 properties, 10 properties, 20 properties, whatever, and those properties have all gone up $50 a week, $20 a week, $100 a week, that's extra cash flow for you to live off. So, just my views on the market, it's not all doom and gloom out there. There is some markets which I feel sorry for people that are trying to sell, they're trying to time the market and all that sort of stuff, but there's a lot of opportunity for people which, are, on either side of the fence. So if you need help on that front, you can always reach out to us, 1300 367 925, send us an email, admin@binvested.com.au. Make sure that you subscribe to us, share us with your friends and family, follow us on Spotify, Google, Apple Play, YouTube, and I'll see you next week. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Join be decentralized and you will see you've been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, and of your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all telling lies, I know what they been telling you. I'm the opposite, the Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking. I can't help it if I really